For decades, markets haven't been too fond of companies like Volkswagen. It's been seen as part of the old industry, heavy on capital and not so eco-friendly. Making cars traditionally hasn't had much sparkle unless they were electric. A common story told is the old school car makers are on their way out to be overtaken by Tesla and similar companies. But here's a thought. What if things are starting to shift? Big automakers are starting to catch up and are giving Tesla a run for its money in the electric vehicle market. Volkswagen is leading this pack, seemingly in a great spot to bring affordable EVs to everyday folks. On paper, the group looks like it has all it needs: the money, technology, brand power, and manufacturing capability to transition smoothly to electric mobility. But digging a bit deeper, the question arises, does it genuinely have what it takes to reign supreme in the EV market? As of 2023, Volkswagen Group has outpaced Toyota in terms of revenue and is currently ranking #1 among the car makers in that regard. However, if we take a look at market capitalization, a whole different story appears. VW is only 7th on the list. As you may have already noticed, it's not all smooth driving for this German automaker. The challenges Volkswagen is grappling with mirror the wider economic and industrial hiccups happening in Germany. A significant wrench in the gears has been China's speedy ascent in the electric vehicle sector. Chinese companies like BYD Motors aren't just joining the race, they're setting a new pace, even outselling Volkswagen in China's EV space, something that would have raised eyebrows not too long ago. After all, VW has 3 joint ventures in China and is the largest car manufacturer in the country with around a 15% market share of the 21.1 million unit market. VW is trying to fight competition in the EV field. In 2022, German automaker pulled the curtains back on a fresh initiative dubbed PowerCo, with plans to pepper Europe with 6 new battery factories. Kicking off in its home turf at Salzgitter in Lower Saxony, with the first factory slated to start production in 2025, the venture saw an initial injection of 1.7 billion euros. This hefty investment is set to be mirrored in Valencia, Spain. If you're interested in investing in commodities, stocks, crypto, indices, or bonds, you should definitely try DukasCopy. You can invest with just one click, starting from $1. Sounds good, right? Simply scan this QR code or check the link in the description below to get started. Fill out the form and then make a video call with a DukasCopy operator. You can also purchase and trade Amazon stocks with DukasCopy Bank. That's all you need to do to open your DukasCopy bank account. Your Swiss bank account with DukasCopy will be ready to use the same day. Switching gears to electric has also handed VW a golden ticket to spruce up its corporate and financial framework, and they've already rolled up their sleeves and gotten to work. Volkswagen has engineered a brand new from the ground up process for EVs, which is sharing among its various brands. This move not only pumps up the synergy across the brands, but also slashes wastage in overlapping R&D. Moreover, VW is welcoming the future of cars as interconnected devices, making giant strides in software, dedicated electronics hardware, and shoveling investments into autonomous driving tech. Let's boil this down with a simple comparison. If the car industry were the tech industry, Tesla might be Apple, Volkswagen could be likened to Samsung, and BYD Motors, along with other Chinese EV makers, might be paralleled with Xiaomi or Huawei. Sure, no one's claiming Samsung's phones are inferior, it's just they're not Apple. So in this scenario, it seems Volkswagen might consistently follow Tesla's taillights in the EV realm, partially because of brand placement and partly owing to the robust competition from Chinese competitors. Sounds quite like Samsung's spot in the tech world, doesn't it? Yet this doesn't necessarily spell a nosedive for their stock. If we stick with the analogy, Samsung's still cruising along quite comfortably, right? Each player holds their ground. Volkswagen seems to have a tight grip on its market niche and doesn't appear to be loosening its hold anytime soon. Yes, the heat from Chinese competitors is intense, but if you glance at the financial forecast for Volkswagen stock as provided by experts, it tells its own story. Target price is more than 20% higher than the current share price, but analysts are not within a statistically realistically confident range of agreement. Volkswagen is forecasted to grow earnings and revenue by 8.8% and 2.7% per annum respectively. EPS is expected to grow by 7.8%. Return on equity is forecast to be 9% in 3 years. And just a friendly reminder, all investments come with risks. This isn't financial advice. Always steer your investment decisions based on your own research and considerations. That's all the time we have today on the Investment Brainstorm. I'm your host, Matthew Stevenson, in partnership with DukascopyTV. Remember, money can take care of you. It cannot take care of itself.